there's a lot of psychology too.
Hello and welcome, everybody. This is Chart Request Live. Patrick and I do this every Tuesday and Thursday at 1 o'clock right here on Stock Market TV. How are you doing today, Pat?
I'm doing well, doing well. Kind of a rough start to the year, but there's definitely going to be opportunities, and yeah, excited for kind of a fresh start. What about you?
Rough start for who? I mean, not stocks, not coal stocks.
That's true. I got this AMR here. We were just looking at it before. Do you want to touch on this a little bit?
No, just off air, I was just telling Patrick the stock is up 19,000% from its 2020
What?
lows. Yep,
Wait,
19.
from its COVID lows? Are you serious?
Yep. So it had
17. Wow.
18,000, whatever. It had a $38 million market cap back then,
19,000. You're right.
almost 5 billion today.
Holy crap! And
They
and
have-
was it the price of coal? Was it?
I'll tell you what it was. So all coal stocks have done well, right? That's no secret, but not like this. So I said, okay, what are these guys doing differently? Massive share buybacks. They have retired almost a third of their outstanding shares just over the past few years.
Wow.
They are buying back shares like wild men out there.
You don't really hear that debate much anymore, but you remember for a while it was like,
Yeah, buybacks are bad.
are buybacks good or bad? Like, if I know it's not as simple as black and white, good or bad, but on the average, would you say buybacks are good? Because I mean they do propel the stock higher.
Buybacks are great. Absolutely.
Yeah.
No one in finance was ever arguing or would ever argue that buybacks are bad. That's a political argument. Like nobody who ever went to business school or learned about this stuff would argue that. In fact, buybacks are a far more efficient way to return capital to shareholders than dividends.
Ah, interesting. Why do you say that?
That's why Mr. Warren Buffett and Berkshire Hathaway, they buy back stock all day. They do not pay dividends.
Interesting.
One of his and Charlie's main pillar belief is if you're going to return to shareholders via buybacks, never dividends.
Well, hey man, first of all, I love a good ascending triangle breakout. I think there's some cool psychology to the pattern too. Every time it gets rejected at horizontal resistance, the trend continues making new highs, and then eventually you get this resolution out of that tight range. And wow, look at that. Just nice candle today. Anyway, let's move on from coal. What do we got?
Let's hit the emails real quick, and then we'll jump into it. Okay, I'm going to start from the top here. Joshua, WST.
WST. West Pharmaceutical Services. All right. Start with a weekly here. Oh, nice primary uptrend here. Looks like it tried to make it back to those highs, couldn't quite do it, ran into resistance here. An expensive stock. Is this like do they make drugs themselves or?
Don't know. What's the market cap?
25 billion.
25, wow.
So I mean, I'd really like to see it break this. I don't know why it says 101 there, sorry. I'd really like to see it break this 425 level before getting involved. But
yeah,
if you're looking to play it kind of on a tactical basis here, I don't know. I just, I think you really got to wait for that I mean, really, I'd like to see it break out to all-time highs. You're really not that far away, and 30% is still a decent amount away. But yeah, I like it above 425, but until then, it's really kind of hard to get too excited about it.
And I don't love the price action since that gap back
Yeah,
in October.
it did fill that gap, which is good, but still kind of just struggling once it did.
Like weak bounce off the October lows when so many things were ripping. Now kind of breaking that short-term trend. Yeah.
Yeah.
Next.
All
Jeff,
right.
McDonald's.
McDonald's, MCD. Here we go, getting a little rejection at the former highs here. Like a lot of stocks, I mean, the S&P itself, right? rallied right up to those former highs and then just couldn't get right through. And that's common, you don't always break through, especially when you're dealing with a 20-30% drawdown like the S&P was, or this one got, you know, 17% at the October lows. But yeah, you really want to see it get above 300 and get that breakout before you get involved. Is it a short here? I don't think you want to go out and short McDonald's. But it definitely looks like it could be a little looks a little heavy here. Looks like it could pause in the near term.
Big move
But
off the October lows. It's come a long
yeah,
way.
and a lot of these large caps, they're dealing with this kind of divergence here. Um, where they made new highs, but RSI didn't. And that's not the end of the world. A lot of these are coming from extreme overbought. And I think ultimately what you want to see from RSI is kind of maybe correct, but hold above 50. That would be the most bullish scenario, and just stay within that bullish range. That's kind of what you want to see here. And ultimately, you got to see price break above 300. But if it does, that's a nice multi-month consolidation that it's breaking out from. So over 300, and we can fib it out here to get the target in case it does break 300.
Pivot.
Fib it. All right, so 332 is that first Fibonacci level there. So not bad. 300 gets you 330. Not awful.
I might start using that fib tool.
Yeah.
Yeah. Less
So
line.
I kind of like using I don't like having like the 100% and the 1% here. So I
like
just like doing the trend line.
less lines. Yeah.
Yeah. What do we got?
What's next? Wavy. Long Brazilian real, Japanese yen pair.
Whoa, what?
BRL JPY.
Oh my gosh. Wavy. Hit me with the tough question. My gosh.
So this is a risk on Forex pair.
Okay. Yeah, Steve, why don't you do this one? Because you can speak to the Forex intermarket stuff a little bit better.
I'll talk about the pair, but you're doing the
I'll
chart.
do the chart. You talk about the pair and the significance.
Brazilian real. This is a resource country, right? Commodity currency, even Brazilian real. Probably the biggest, most important in Latin America, right? So it's a bullish Latin America play, probably bullish commodities play, right? And then you have the traditional safe haven defensive, at least it's supposed to be, Japanese yen, right? So you're putting the risk or the offense in the numerator of the Forex pair, and then the defense or the risk off yen in the denominator. So I do like this just because of the risk on position that it is.
Yeah, I mean it's holding those 2022 highs really well. I mean it's tested that as support several times and it just doesn't want to break. You got this little momentum divergence here to start the year. I would draw the resistance here because this looks like a failed move to me. It tested this level so many times and failed. Finally break through, but couldn't hold it. So I think you ultimately want to see it get above here for a trade. Or, I mean, if you're in it now, trade it up to that resistance level, take profits there.
Yeah, I like that, Pat. And I'll just add, if I may,
Please.
I like this. I would probably just do it against the dollar, though.
Yeah.
Throw up BRL USD. You got a nice base in Brazilian real. I think lower dollars.
Are you saying longer term base or?
Yeah. Right?
Yeah, I see what you're saying there.
Draw a line in a couple different places there. When that base completes, I like that.
Yeah, for sure.
All right, what else we got? Gerber. Is Tesla a buy at these levels around the 50-day moving average? You have a 50-day on your chart?
50 day. We can throw up a 50 day. Is it a buy near the 50-day moving average?
Hey, you're on a weekly. Yeah.
Yeah, there we go.
Okay.
Actually, I had my moving averages set for daily, even. But anyway, So coming in here, holding that, ultimately I would rather see it get above here before buying. I don't usually trade with moving averages. I think they're better used for like trend identification.
Yep.
But it's not the worst here. I think it's kind of got this head and shoulders action. Um, in terms of the FANG stocks or the Magnificent Seven, whatever you want to call them, I don't think Tesla is one of the strongest right now. I mean, it definitely isn't.
Yep.
But that doesn't mean that can't change. But I don't hate it here, but I would ultimately wait for confirmation of this bullish pattern on a break above this 300 level. We can kind of zoom out here, go back into a weekly.
Look how noisy the 50-day is too.
Yeah,
Look at it.
yeah, exactly. So if you were going to trade moving averages, you want to at least see that it is acting as support or resistance. And like you said, just a lot of whipsaws there.
Pat, why don't you anchor a VWAP from the highs last summer?
Yeah, good call. Wow, right there. Wow, look at that. And VWAPs are very similar to moving averages. It's just they have volume incorporated into it. And I think those are better used for support and resistance because there's price memory there associated with them. So, I would defer to the VWAP here rather than the 50-day. They're obviously in the same spot, so similar signal there, but
So we'll change the question around to, is Tesla a buy at these levels around the VWAP from those old highs? If you're looking for a place to enter Tesla, I think yeah, right. But
yeah.
to your point, not at the top of our list of stocks that we're looking to buy right now due to the lack of leadership.
Mhm.
Fair?
Yeah, absolutely.
All right, what do we got next? I had some, but we'll get to them next. Hanson, did you know I can make requests too for you?
Let's hear it. What do you got?
We're gonna do them at the end. Cameco, CCJ, 6 month time frame.
Woo.
They're
All
all up
right.
today. These uranium stocks.
They're up today? Is up? Yeah, I mean, ooh, at least this one is. Man, I mean, let's start zoomed out, right? So you said 6 month time frames. Man, it's almost completed that base. Look at that. And you know what? I think you'd probably get some initial rejection when you finally get up to that level. Um, it's testing those highs for the first time after a really, really strong run. You could easily get a 20% sell-off once you get there. But if that base completes and you finally do get over 60, maybe we're talking next year, Steve, for this one.
Yeah.
But this is one that's really been leadership. You could look at it against URA too. It's the largest component in URA, right?
Them or next gen, I would think yes.
Yeah. I mean, so we're looking at CCJ on a relative basis relative to uranium stocks, and it's looking ready to lead again.
So good. And like
Yeah.
zoom out on this. It's been leading for a long time.
Oh, yeah.
Off the 2020 lows? Yeah.
Yeah.
Oh.
And this is probably another one, Steve, that, we looked at AMR at the top and it was up, what, 19,000%. So this isn't quite that, but 600% off the COVID lows. Oh, more than that.
Nine, what was this? 600 or 6,000%? 600%,
600. Yeah. Around there.
which is crazy, right? And like a 7x, 19,000% is like truly remarkable. Just
Yeah.
I was just saying to the guys offline, like I don't know if I've ever seen a stock rise so fastly, so consistently.
Yeah.
Like
Yeah. And
4 years.
I could get a little concerned about this bearish momentum divergence here, but if you got worried about that in the past, you're missing the trend, right? I mean, look at this. You could draw this so many different times, and it just kept going,
Yep.
right? So, and another thing with RSI here, not getting oversold, right?
Yeah, I was just gonna say
So,
more about the regime for this
right.
kind of trend.
And this is one that we talk about it all the time is these trends that break out from these multi-year bases. And those are the hardest trends to get into because they just consistently go up and they don't give you this chance to get
Yep.
in. So This is one of those. I like this one. Ultimately, probably be taking profits up at that. What was it 55 up there? Yeah, about
Okay.
50, 54.
All right,
Mid
so
50s.
we're talking about big bases. We're talking about uranium. I'm just going to toss you one that
Yeah,
I think is appropriate. UEC, Uranium Energy Corp, and give me like a weekly. Zoom out,
yeah, sure.
boy.
So
Zoom
this
up,
is
all the way, all the way.
all the way. Okay. Should we go monthly?
Yeah, sure.
We'll go. Oh my gosh.
Look at that.
Wow.
Yeah, right.
Wow. That's a monthly too. I mean, we're talking 2000, going back to 2006.
I guess the point is whether it's Cameco and the base that you just drew up there, or something like Uranium Energy and this monster base here. These are absolutely gigundo bases.
Huge. Yeah.
If and when these things ever resolve higher, this trend probably lasts a really long time. If this is truly a new bull market for uranium, and these bases break out, I don't know where these charts go, but exciting.
Have you seen anything from a sentiment perspective about uranium? Like, are you seeing it more now that the stocks are working? Like, you seeing people talking about uranium stocks more?
Yeah, people are starting to like it too much, actually. It uranium did a total 180 from one of the most hated things or most hated industry groups in the stock market. Now it's like everybody's favorite, and politicians all of a sudden like it. And you're hearing it get called clean energy now. Forever, uranium or nuclear was just dangerous energy. And we don't have
Yeah.
anything to do with it. Now all of a sudden these guys are clean energy. Wow. So I think from a sentiment perspective, that's probably not the best, right? Probably
Yeah. Well, yeah.
like it
Um,
when they hate it. But that's turning point stuff. We're in the meat of a trend now. So,
right, right. Yeah. Exactly.
all right, what do we got next? That is it from the emails. Heading over to the chat. What's up, everybody?
Hey,
How we doing on time here? 120. We're doing great,
we
Patrick.
got time. We got time.
Cruising. All right, take it from the top here in the chat. H Chan, BN, long, 6 month time frame. Guys, awesome stuff with the time frames. I think it
Yeah.
things a lot easier for Patrick and I.
Brookfield.
Yeah.
Nice clean level there. We already got it drawn in here.
Yep.
Right around 37, 36, or 35 to 37. And those are the pre-COVID highs right there. I like it if it's above there. You got this trend line breakout. This is a REIT, right?
It's an asset manager, but it is
Oh
REITing.
yeah.
It's
Right,
REITing.
right. It's REIT. Do you call it
Talk
REIT?
about- Didn't we talk about that on here like last week?
I think we did, yeah.
I
Uh,
I like this group a lot, Pat.
yeah. And I like it above here, above, now it's
Yep.
ultimately I'd like to see it above 40, but I think you get back to these former highs eventually this year, around 51. But like it above the pre-COVID highs. That's a good start.
So you're saying it heads back to those prior cycle highs?
Yeah, but I think it'll probably be a messy base building process where, first we test these August highs, right? And then get rejected. Maybe we retest the base, the pre-COVID highs. Then we run up here and, we kind of stair step higher.
Won't be a straight line.
Won't be a straight line.
So, exercise that we like to do on the analyst team when we're looking at one stock in a group is to then go look at what its peers did or are doing, right? So let me give you the leader in this subgroup. Throw up KKR. Let's see what that one's done. Right. So we're just
Ooh.
staying in the asset
Oh man,
management
that's a nice
space,
base.
staying in the asset management space, but picking one of the best looking ones. And this is exactly what you're saying is in Brookfield's future.
Yeah, yeah, exactly. Yeah. And it's completed that though, right? So this one's a little ahead of Brookfield, but man, that is a nice base. Let's drop it in a weekly so you guys can see it a little better. Wow.
Yeah, look at that, man. This thing just
Wow.
up, 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 up. I put this trade on yesterday,
Really nice.
not KKR. I'll explain.
Ah,
I bought Carlisle Group, CG.
CG?
Yeah, you got the base breakout. You got a little throwback. No, that's no CG.
CG. Sure. CJ.
So we got the base breakout, then like textbook throwback to a pretty clean, clear level. I said, why not? I've been looking at these stocks. We've been talking about these stocks. They've been red hot. Been waiting for an opportunity. So took my shot
I
yesterday.
like it. I like it. Coming in here, retesting, and I think, what are you looking at? 47 here, 46?
Mm, I was looking at, I got mine drawn at 38.70.
38.70 for the
Oh, for the breakout level. And then yeah,
yeah, yeah.
I want this back at those old highs, just like you were just saying about the
Oh, okay.
yep.
Yeah, 60.
62% get out of here.
Is that
I
is that
want the
what?
100.
Oh, okay. You're going all the way. That's a
Pays a nice
50%
dividend.
move. That's nice.
These companies, a lot of these companies will pay nice dividends. They do vary a lot. So do your homework, kind of pick the one that's best for you. What's the dividend on Brookfield? Just curious. I think it's smaller.
And then what's the other one?
BX.
BX, yeah, Blackstone. There we go.
How
So that's
good?
interesting. You would rather be in Carlisle than something like BX or CG,
Nope.
or I'm sorry,
It,
KKR.
it's not that I would rather be in Carlisle. I wish I bought these a couple months ago, all of them.
Yeah,
It's that Carlisle pulled back and gave me a really clean, clear entry. So that gives me a way that I know I can manage my risk, right, responsibly, have a plan. Something like Blackstone, it's not really pulling back close to that base breakout level, right? And then something
right.
like KKR, I also thought about, but I would more want to buy this on strength back above those old highs. So Carlisle was just kind of ready and actionable, and that's why I picked it.
I see. I see. Makes
All right,
sense.
what's
Uh,
next? We
what do we got?
got uh, AIG.
AIG. We were talking about this yesterday. These insurance stocks, they seem like they're acting like safe havens almost. When the market corrects a little bit, it seems like these are an area of relative strength. And then when we have a risk on market and we start seeing the ARCs of the world and all these growth stocks and all these, we're moving out down the risk spectrum,
Yeah,
then you see money rotate out of these insurance stocks. So, did we lose Steve? I think we might have lost Steve.
right
Uh,
here.
hey, you're there. So I think that's interesting there. You're seeing a lot of these insurance stocks picking up again as the market's kind of corrected or pulled back a little these first few days of the year. But anyway, AIG, really nice breakout here. We're
I think
looking
the
at a
bottom
weekly
line,
chart.
I think the bottom
Yeah,
line to your point, Pat, is they're kind of defensive.
yeah, yeah. Especially within financials. I mean, yeah. And it's all insurance companies, whether you're talking about like health insurance or
100%. I agree. The insurance companies in every sector, they're like the staples of their sector.
yeah, yeah. That's a good analogy there. But look at this thing. I mean, what is this? 65? That level's been resistance for a decade, and we finally just broke above it. And
More arrows. We need more arrows.
yeah, you want more? I'm just trying to make the point that
Yeah,
man, that thing
I
got
like it.
rejected there so many times, and we finally did it.
I like it.
Uh, so, oh wow, sorry about that.
Whoa.
Well, I don't know what that is.
Oh, what happened to you, AIG? I remember
Yeah.
that.
So I think you're looking at 100 for a price target here.
I like it.
Oh, okay. So was
I
that
like
the
$100 roll. What?
were we just looking at the financial crisis? Wow, yeah. Holy crap.
But think of when the stock price gets back into that area.
Yeah, trade
Think of
this
that.
gap here.
We call these volume pockets,
That's a
memory
good point,
gaps.
Steve. Yeah.
It-
I gotta take off a
Breakout.
bunch of these.
This breakout is not just a beautiful multi-year breakout. It puts you back into this memory pocket.
That's a
Which
really good point.
I like that.
Look at this is a gap on a weekly chart.
Dude.
A gap on a weekly. That's
Wild times.
wow. But that's a really good point. We're just entering that gap for the first time since the Great Financial Crisis.
All right.
Wow.
The people have a lot of wants in the
Oh,
chat.
let's hear him. Let's hear him.
Keep it moving. I like CVE for a few months to the upside at support. First stop 21-ish. That is Eureka Randall.
CBE?
CVE, I believe this is silver.
CBE. Okay. Yeah.
Novus, is it CVE?
Synovus, yeah. Okay.
Oh no, it's energy, not silver. That's right.
All right. So holding that level real nice, refused to break down. It looks like a lot of energy stocks. I didn't have to know that this was an energy stock. So it just looks like most of them right
It
now. And
really does.
yeah, let's look at XLE to make that point. Very similar look to it, held that shelf of
Oxy.
resistance. Oh yeah, Oxy's another great one. But back to Synovus, like you're gonna want to, or that's gonna break out at the same time that XLE does, right? They're all gonna be ripping at the same time. For this one, you might want to see it break maybe the downtrend line here. Um, but
So yeah,
it's not breaking down. I think that's information right there. I could, you could definitely trade this one, put a stop at 15, maybe 14, look for that breakout,
yeah.
maybe a return back to those 2014 highs around 30. That's a double, pretty much.
If you are of the opinion that energy not only holds the line here, digs in, but then goes on to resolve these ranges, like Patrick just described, right? If that is your outlook, or that's what you're anticipating, buy this support zone all day.
Yeah.
It would be a great entry, right? You're buying the lower bounds of this continuation pattern range.
Yeah, I don't hate this at all. I mean, if it doesn't hold that, then you're looking at $10 here. That's a pretty clear support level down there. But I
That's
mean, it's had every chance to break down. It just hasn't. We can look at RSI here. Has not even gotten oversold. We're looking at, I know you don't like RSI in a weekly. Um, oh, okay. I see what you mean about looking like Oxy. It does look an awful lot like Oxy here.
the Buffett zone. Who can buy?
Every time it touches that thing, though, you haven't gotten like a real bounce. It hasn't really gotten going yet. It's a hard part. It's a
So,
hard.
all right. So Chris Verone was on the show this morning.
Oh, nice.
If you guys missed it,
I got to
Patrick,
go back.
this go watch it. I mean, he's one of the best.
Can I just say a real quick thing about him? So
Yeah.
when I had him on the show, I always overthink it and I write out the questions before and I was like, hey, do you want to go over, the questions? You want to hear the questions before at least? And he was like, no, I don't want to hear the questions. He's like,
Love
let's
it.
just go. Let's do it. I'm like, all right, let's do it. He nailed it.
He has a really special way of kind of getting his thoughts across. I like the way that he thinks, right? So we talked all about that, like his process, the way that he approaches, the way that he thinks about markets. And then he just left us with some real gems. One of them was he said, they can't kill energy. He kept saying it. They can't kill energy. And that stood out to him, right? The fact that it just won't break. We have these prolonged sideways, they look like tops, right? They're
Right.
not completing. They're still not tops, right? So that the only other option, if they're not going to be tops, they're going to be failed tops,
Ooh,
continuation patterns.
yeah.
He pointed to Saudi Arabian stocks. So the Tadawul All Share Index, new
Um,
2-week highs today.
that's
Breaking out.
interesting that you bring that up. Yeah. Go on.
And he mentioned how it tends to lead crude oil. Saudi
Well, 'cause
Arabia.
I remember seeing Saudi Arabia recently on a list of like relative strength leader. I think it was actually from GT Lackey with
Yeah.
yeah.
You could pull it up if you want.
Yeah.
TASI.
TASI.
Yep.
This is what, like the S&P of Saudi Arabia, or
Yes, that's right.
look at that engulfing candle. Wow.
That's today.
Wow. Is that today?
Or
Yeah.
yesterday. It might be
Today,
yesterday.
yeah. Fourth.
Wow.
So what was he saying as far as this? Like what information's there? You're saying it leads energy?
It leads crude. You'll see it if you overlay the two. You'll see it at the 2020 lows. You saw it again at the highs. In
Gee,
summer.
that's like chart of the day right there. That is
Good, right? Pretty good. All right, next. Santa brought the market coal for Christmas. I was hoping to get coal from Santa for Christmas this year, and he didn't come through for me.
so. I mean, that is kind of significant. Like we were looking at the years where he doesn't show up,
Yeah.
and it's you're not in good company. You're in some pretty subpar years to put it nicely.
All right, STNG. I think this is a shipper. This is a tanker.
Yeah, a lot of these tankers have been getting a lot of buzz lately. All this stuff that's going on with the stuff in the Middle East, the hijackings. Dude, I saw one of the videos of those. That's nuts. They'll
Oh,
straight up land a helicopter on these tankers and just take over with guns. It's
it's
insane.
crazy.
Yeah, very
Um,
good stuff.
so within industrials, so just so far this year, so what do we have? 2.5 days here. Shipping stocks are up 5.5%. Every other subgroup within the industrial sector lower so far this year. Shipping is really working.
Is there a shipping like industry group ETF? Like ship?
They brought back C. I don't know how good it is, but yeah, it would be C.
What is it, SEA or no, that's
Yeah, that's it. I mean,
yeah, not too much information there.
what do
So
you
wait,
think of
both
STNG chart? Pretty good, right?
STNG, right?
Yeah.
I like that. That's a very nice base breakout. You know, you've been consolidating since February within a longer term uptrend. I mean, the uptrend hasn't been there that long, but since 2020, a lot of these industrial type stocks, you know, they've been just ripping since 2020. I like this chart a lot, Steve. What do you think?
I do too. I think there's a lot to like here. Yeah.
Yeah. So you got the downtrend breakout. You know, now we're making higher highs. Haven't gone anywhere since February, and we're finally resolving out of that almost 1 year base. You know, let's fib this little base out here. I call it little, but that's a year. 79. What does that coincide with here? Yeah, this kind of shelf over here.
Run it back to the highs. It's a double back to those old highs.
Oh yeah, you think it's going back there? Yeah, I mean, honestly, we could even fib out the whole thing, right?
Yeah, what does that give you? Oh,
That. So here, we've already gotten above the 38.2 of the entire range, right? That gets you to the 61.8.
yep.
61.8 gets you what?
I'm
Back to
with
the back. Yeah.
right
Yeah,
there.
Steve, I don't think that's out of the question. We're probably talking 2 years from now, but
Yeah.
um, I mean, shoot. I think even just on a tactical basis, you know, you got the breakout just yesterday or today.
So the
So I think
short-term relative strength is
yeah,
there.
this
Moving
works from a
up.
short-term perspective, long-term perspective. Yeah, have at this one.
And hey, look, if you got to hold it for a year or two to get back to those old highs, they're going to pay you 2% and change.
And you got a nice fuzzy narrative to make you feel better about it too. So nice warm story to make you feel good about the trade.
Hey, here's a fun one from Brandon Smith. Does it seem like staples are bottoming relative to the S&P 500?
Oh,
Bulls
it does.
Bulls ought to hope not. Bulls
Yeah.
should really hope not, right?
Yep. We've been looking at this one, Steve. I know you've been looking at this one too. And it's not just staples, right? You could look at utilities. Are there any other kind of risk pairs that you're looking at that you don't like the look of them right now?
I mean, don't tell JC, but if you were to overlay XLV SPY with this, healthcare relative looks the exact same way, and it is reversing a bit.
This over here, scale.
You have the
Yeah.
premium account, right? That's how you're able to do all this?
Yeah, I believe so.
Great charting from Mr. Patrick today.
Oh
I mean,
man.
you're familiar. You're really familiar with all the drawing tools and
You
stuff.
got to get fast with them. And here you got to make sure you're in the regular scales once you do that. Oh,
Just zoom in. This past cycle or two.
yeah, I
Yeah.
mean they look identical. Yeah, you're right.
Uh,
Wow.
Healthcare making more progress.
Should we throw an XLU too?
Yeah, what's that look like? So what would it mean, right? If these charts did all reverse and start moving up and to the right? Are stocks going up or down on absolute terms in that environment? Probably.
If they're going up, then stocks are probably going down. And you know, we saw a similar move before the what was it, summer sell-off, I think. I got to get rid of all these lines. I'm like getting a headache from them. But where was it? Shoot. Here, let me put this in a. But yeah, when we saw the sell-off this fall, you saw a similar move, like a false breakdown from the defensive sectors on a relative basis, and that was kind of the signal. It must have been in August, I guess, right? But Yeah, no, but to answer his question, you don't want to see if you're a bull, you don't want to see this ratio or any of those defensive ratios get going again, and they are.
I, and I think to be fair, let me know if you disagree. There's
Sure.
very little evidence that this trend is reversing right now. The only evidence really is that we're at a potential support zone, so it would be a logical level for it to stop falling.
Right.
We're not really seeing that yet.
Right. I mean, it hasn't officially kind of confirmed it. Yeah, you're right. You're right. It could totally just hit this and then just boom, new lows in 2 weeks from now.
Money over fame productions. UPS, possible reversal pattern on the daily short to midterm trade back to 190. Looks like a failed top to me.
These have become some of my favorite patterns, the failed
Oh,
tops, and I think you really helped me identify them over the years. You could draw this a number of different ways in a bearish way, right? And that's an ugly top. If I was long this thing, I would be worried when it broke down. I would be out of it when it broke down. But you quickly reclaimed it, and anybody who shorted or anybody that got stopped out there, now the chase is on. So I love these failed moves. If you want, we could take a look at one after this. But this one poked through it. If it's above that 160 level, man, you could easily play this one back to the former highs around 230. I mean, that's nice 50% move almost. And I don't think you're just playing back to the old highs with this one. I think you're looking for reversion beyond that, right? So this is yeah, who brought this one? Whoever brought it. I like the look here.
yeah, it is a good chart. It was money over fame.
I like it.
Everybody hit the like button for us. We gotta get our likes up for these videos so that
Sure
we
do.
get bigger audience. We can even do more of this, make the show longer. Uh,
To but yeah, to make that point, I mean, so this is a failed top that we had traded in the buzz that we do chart report premium or private access. But this
Merger?
one,
What happened here? Is this an acquisition?
so this is CYTK. It's a biotech company. So this was a failed top, tried to break down right here. Here, I'll put it in a better. There we go.
Oh,
Tried to break down. Oh, there we go. Poked through actually, and then it reclaimed that, and then you just got a ripper. So those failed moves going back to UPS, I mean, those can just really you're looking for beyond all-time highs here.
all right. We got to speed up here. I don't think
Yeah,
we're
yeah.
going to get to them all. Arch trying to break above its range today. We've been passing this chart around in our Slack channel all morning. It does look like it's breaking out. Give them some levels, Pat.
Yeah. Man, this
The
is
fib's not gonna get you done. I'm doing a measured move here. It's 75.
okay. Yeah. So I mean, above 175, that's awesome. You're doing measured move?
250. You measure it out, it's like 100 to 175.
Have you looked at the fibs here or
Yeah, they don't line up.
they don't line up? Oh man, that's a nice one. And I was saying I like those ascending triangle patterns. This one kind of has that look to it, right? You
Yes,
got this. That's been in place for a few months now. Above 175. So you're doing a measured move. So what are you looking at? Like this kind of?
yeah. So I round. So I did 75, tacking it on to 175, 250.
Oh, okay, yeah, I'm in a log scale, so it's not going to work out that way. But
All right, next chart.
250. That's all the way. Here, let me go to weekly.
Josh in the chat says AMR paid off all their long-term debt too. Gorgeous. I love it. Thanks for the info. A good friend of ours, Matt Warder, who's been all over coal stocks, loves his company's fundamentals, loves their balance sheet, tells us all sorts of fun facts like this. Neo and Mara, real quick.
I like that. I like that for a target though. I mean, that's some nice symmetry there. Neo. All right. Holding those IPO highs, right, or that IPO price nicely. This doesn't look like the worst for one of these speculative EV types names. I'd like to see it kind of above there, above that $10 level. This wasn't a SPAC, right?
I don't know.
I mean, it was definitely grouped in with those. Uh, yeah, I think you ultimately want to see it reclaim those IPO highs, which is still a decent ways away. But I like that it's not breaking down here. You don't want to see it break this. If it's below 7, don't touch it. Don't touch it. But you're not getting oversold. It's not the worst. You know, if growth does make a comeback here, I know it's kind of at an inflection point, right? Like, do we keep the risk on rally going here, or do we, see a comeback in value stocks and energy and all that trade coming back? That kind of is the big question right now. But if growth stocks do get going again, this doesn't look like the worst as long as it's above 7 or even better above these IPO highs around 12, 12, 13.
Yeah, you gotta
Yeah,
love
I
that.
think I'd like it better there. Yeah.
Next chart.
Is that you get the breakout from the downtrend too? Yeah. What do you got?
Do the Mara real quick.
Uh, this is a popular one. I feel like we look at this like every week, right?
Yeah, we do.
So it's above our level. I mean, we already had it drawn in here. 21's the level. It's above there, so you gotta be bullish on this one. But completed this nice base here. I think a lot of people are trying to figure out, are the miners the best way to play it here? Or, are they going to work after halving all that? Who cares? Like they're working, right? It's above 21. 21 probably gets you back to 80. And then you've completed a nice 2-year base. You're looking for much higher prices from there. I think this one's a buy right now.
And you got to be quick for this one. I mean, this thing pulled back, wicked right off that level. Now I think it's back up today. So set your alerts and be ready when you get these retests.
Yeah.
Dollar General and Abercrombie and Fitch on 6 to 12-month time frame.
Dude, these like teeny bopper retailers like Abercrombie and Fitch, American
Teeny
Eagle. Yeah.
boppers.
Yeah.
The boppers.
What is going on with them? I mean, I saw somebody call it the what is it, Abercrombie Fitch's aunts? It was like the Renaissance of yeah, made quite a comeback. Anyway, Dollar General, let's look at this one first. Man, real gappy. I bet these are all on earnings. I bet.
Really gappy.
Yeah.
A little too gappy for me here.
Um, but how about this? If it does
Yeah.
break this, that's a nice little volume pocket, right?
I think that's the trade.
That's easy. Yeah, that's the easy trade right there.
He said 6 to 12 months, maybe 1 to 3.
Yeah, maybe a couple weeks. But that's the thing, these volume pockets fill real quick. And you were talking about being quick with Mara. If you get the breakout, you might not even get a chance to get in on this. It might fill like in one candle. We saw that with KRE, with a lot of the regional banks, where they really filled that initial gap. I know we're kind of in it now, but a lot of these bank stocks filled their gap within a day or two. So Dollar General, you get above that 140 level, it gets you back to 155. It's not a huge trade there, but I think it's a nice little pop.
A&F quick. Do you
And
teeny boppers?
teeny bopper. Oh man, what a trend. This is one of those that once it breaks out, it's really tough to get into because it doesn't really give you a chance to get in. I think Walter Deemer has a great quote. It's like, uh, once the train's left the station, like it doesn't go back to the station to let the latecomers on. And if it does, there's something wrong with the train. And this is like that, right? Like the train's left the station. And that doesn't mean that you can't profit off the stock, but you just kind of got to plug your nose and buy it and find your risk levels to manage the trade.
If you miss the reversal pattern, you're probably buying short-term continuation patterns to enter.
Yeah.
That's it. If you miss the big base breakout, then you buy the short-term coils, the flags.
Right, you're saying the flags and things like that, right? And you
Triangles.
kind of have a flag right here, to get back to the question on how you would trade this. I mean, yeah, I'd just say buy it here and just hold on for higher highs. I mean, you're just now breaking here. That being said, I think you got to be real vigilant if it doesn't hold 75 or so. If it gets back below 75 or so, then you're dealing with a failed breakout, multi-year failed breakout, and you could get back down to 50 real quick.
OKE,
Okay. Okay. Wow. Okay.
nat gas, I believe.
All right.
Should be a good yield here.
Knocking on the
Wavy,
door.
Wavy doesn't love my buybacks comments. And you're right. He said, send me my money. I want my dividends. I feel the same way. I like getting paid too. I'm just saying, it's just facts. It's just a more efficient use of capital because it avoids the double taxation of dividends.
This one looking great, looking like an energy stock, right? I mean, it hasn't really broken out yet, despite numerous chances. Also, to Chris Barone's point, hasn't gotten killed yet. They've had numerous chances to kill it. It doesn't seem to want to die. Got this nice little ascending triangle here. We're in a weekly, so keep that in mind. Um, and man, if it gets above that 78 level, it's off. It's off to the races.
Okay, I like it.
Uh, yeah, trading it back to 120. On
120.
the breakout.
Big move.
Probably even higher. I mean, you're talking a decade-long breakout for this one. But
Yeah.
I like this. This is probably a great way to play energy. XLE looks a little more messy. We're probably not going to see all-time highs for quite a while. It's much further off. So
MOR.
MOR. What is this? You heard of this one?
No. Is that the right one? Is that US?
Let's see. AG, biotech,
It's just an ADR. I think it's
1.3
the US
billion.
listed.
Yeah,
That's it.
it's not the worst here. What do you think about biotech? I've been seeing a lot more biotechs lately.
I'm into it.
You like it?
Yep. I missed Merck. I was thinking about buying Merck last week. This thing's absolutely ripping now. This week totally missed it. So I got a little list. Got a
You
little
got
list.
your list.
I got
Checking
a
it
list.
twice. There we go. All right. Above 850 looks good. Above, yeah. And here you got this nice little consolidation. You could even play that on a shorter term basis. You break above 10, call it. 10 probably gets you back to 12. That's a nice move right there. I mean, it doesn't sound like much, $2, but shoot, that's a nice move.
I like it. Okay. Yeah, we gotta get moving here. Oh wait, QS, Bill Serrell. QS, like I mentioned this AM. I don't know who you mentioned to. QS.
Yeah. Okay. So this one, I mean, holding support here at 5. That's good. But really want to see this one bust out of the range. That would be around, call it $14. On a shorter term basis here, I know I've been looking at a lot of like month or weeklies and stuff like that. A lot of you guys are probably shorter term. But it's always good to know the overarching trend,
Yep.
to know like the kind of the main tide that you're in, right? Um, wow, look at that move today, 50% move.
Why? What happened?
Yeah, I don't know. I mean, these
There.
aren't things that I trade, but I don't hate this. I mean, you got a risk level here. You got 750. As long as it's above there, I think you could probably trade it back to the upper end of this range around 13, 14. That's a crazy move today. Yeah.
Yeah, no, I
And
don't
that's
like
the thing, it's really hard to trade it when it's that high above the risk level. Um, look at these gaps. Just what is this one? 4.6 billion engages in the provision of energy storage solutions. Do you think it's like a tanker company or something?
They released some press release about the success of their solid state cell. I think these guys do batteries or
Huh.
EV, it sounds like. Um, So drop the hot press release. Mm,
Can you
mm.
see short interest at all?
This one's not for me. All right,
Yeah.
next. Pinterest and then Met Coal. Met C.
11% art interest. Pinterest. Okay.
Pins. The bill.
Okay. Here we go. So you got the IPO highs here,
Oh, look at that. Hey, look at
pretty
that.
much hanging out right around them, right?
Yeah, because you missed the base breakouts, and now I guess you could use that level to define your
Yeah.
risk.
Yeah. Yeah. This is that base breakout Steve's talking about right here. You can see that was the level. And once you got the breakout, wow, shit, moved really, really quick, just in a few weeks up to its next one. So you missed that one, but this is your new level here. As long as it's above
Yeah.
33, 34, play it back to a Fibonacci level here. We could check this it out. Play it back to 44 for the first stop, and then, hold it on for higher highs depending on how it behaves once it gets there. Yeah.
All right. I like it. METC, METC. I believe it's Ramaco. Stands for
Hey,
metallurgical coal.
wow. Man, we got some coal fans in the chat today.
I love it. I love
Yeah,
it.
I like it too.
People are listening to us, Pat.
Uh,
And just like I said about shipping, let me just throw out fun
sure.
fact on a year-to-date basis. Again, I know only been 2.5 days, yet we do get very important positioning information in the first week of the year. So over the last 2.5 days, year-to-date, so far, 2024, every single subsector within materials is negative. Coal is not. It's the only one that's positive, up 6% so far this year. Stocks look great.
Wow.
Killer start to the year, too.
Yeah. And they've been quietly working too. You don't see too many people talking about this one. You really don't.
We're gonna put a
Will that
trade on
change?
this.
I'm
We're
not
gonna
sure.
put a trade on this one tomorrow, and our commodities note.
There you have it. There you
So
have
spoiler alert.
it.
And the reason we never had a trade on it is because it wasn't really big enough. We don't like to dabble with stuff sub 1 billion. This one's just about there now.
Ah, okay. I like this one a lot. This is a good one. How's volume on it? Pretty good.
Fine.
Fun.
Fine.
Yeah, it looks like it's picking up too, actually.
All right, good. So long above what? Call it 20.
Long above 20 all day. Yeah, play it back to 30. 20 gets you 30. Easy.
Love it.
So
NVIDIA
easy a caveman could do it.
NVIDIA AMD ratio former is trying. So NVIDIA is trying to reclaim pole position. Interesting. I love these requests, guys. Thanks for getting creative.
Yeah.
It's on our toes, a little ratio.
So we're looking at NVIDIA versus AMD. When it's going up, NVIDIA's outperforming AMD. When it's going down, AMD's outperforming the big boy.
Mhm.
Looks like, yeah, NVIDIA's probably looking ready to lead again. Or, I mean, it has been leading, but if it breaks this, NVIDIA leadership all day. Yeah, no real sign of AMD taking over. That being said, though, a lot of these, like AMD looks great from a fresh breakout perspective. I would rather be buying AMD, even though on a relative basis, I know we just looked at it, but in terms of like how far along it is in the breakout, AMD is just starting to break out, right?
But
AMD is where NVIDIA was this time last year.
that's right. But it
So
hasn't outperformed at all over the past few months. Throw the ratio.
it has started to. Yeah, I was looking at
A
a
little
here.
bit.
Well, we'll go back to that ratio. Um,
Has to be a little bit off the October lows, I would think.
yeah.
Okay, there you go.
Yeah, right.
Interesting.
Or well, let's look at AMD NVDA, just the opposite. Yeah.
Yeah, so Pat just flipped it. Okay,
Yeah.
cool. I think the bigger, more important point is why don't you do SMH relative to SPY? The more important point is you're asking the right questions,
Yes.
looking at the right stocks. Here's now just semiconductors at the group level relative to the broader market. Good place to be.
So what he's talking about is these are the dot-com bubbles, the height of speculation. We are just now breaking those on a lot of these tech ratios too. It's not just this one.
Beautiful.
Yeah, I mean, you want to see it hold, but a lot of these tech ratios are just starting to flirt with those or just either breaking out or still struggling to get past them. And it begs the question, we've been talking about tech leadership so much, but what happens when tech finally does break out relative? Um, that's going to really make people mad, right?
We're close. All right, listen, I hate to do this, Pat, but
Yeah,
it's 2 o'clock.
I know. I mean, we've been partying.
We got so many requests today. I'm sorry to everybody's that we missed, but I don't know, if I don't cut it off somewhere, I don't know where they're going to keep coming in. So we are talking internally about different ideas, stuff that we could do with the show. We do want to
Yeah,
get to everybody's requests. I don't know if we do make it longer.
we're
End of
open
the
to
day,
any suggestions too, right?
maybe we do it every day for a half hour. I don't know. But we're talking internally, so yeah, please send us if you have any feedback or suggestions or ideas for us, let us know. But that's going to do it for today. Thank you, as always, to Patrick Dunawillow of the Chart Report. Thank you to
Cheers.
everybody in the chat, everybody
Yeah,
for joining
thank you
us,
guys. A
hanging
lot of
out.
fun as always.
So much fun. We love doing the show. Have a great weekend, everybody, and we will see you back here for the next Chart Request Live, which will be Tuesday at 1 o'clock. In the meantime,
Yeah, Steve in the driver's seat Tuesday.
come join us on the morning show every morning, 8:30 to 10 o'clock. Myself, JC, Spencer, Patrick stops in, Sean, Ian, everybody's doing it. We
And
have
some
best
awesome guests.
Yeah, we have Jeff Hirsch tomorrow. We're going to be talking all about seasonality, the Santa Claus rally, so don't miss it.
Great time to be talking about that.
Jeff will come on around 9. All right. Thanks, Pat. That'll do it.
Awesome. Have a great day, guys.
Bye, everybody.